Okay, so trading psychology. So I'm not going to fix, this is probably one of the hardest topics to actually explain in a video sense. Most of the work I do with my students is usually one-on-one, where I can actually get answers from them and actually work out exactly what's going on. But let's try to get an idea of it. So trading psychology is everything to do with your mind, your mental issues, in terms of actually affecting those things that affect your trading. Okay. So, we spoke about in long-term prosperity, spoke about sticking to your trading plan and applying risk management is the key to being successful. But everything that stops you from doing that is literally going to be emotions, okay? Now, we have a lot of trading fears that affect our trading altogether. Let's go through them real quickly, okay? So the first one is, we have these 4 pillars. The first one is ego. So being wrong. So, most of us always assume that we're sort of scared of being wrong, but we don't really accept it either, because part of trading Forex is you're going to be wrong. Even if you're 100% right, you can still be wrong. You can still lose a trade, and that plays on us and affects us in a human sense, because we don't like being wrong. We don't like taking losses. We don't accept being rejected. We don't sort of accept that. So it's a fear that we have when we try to take a trade. Next one is FOMO, so missing out, the fear of missing out. Now this is massive, because most of us see momentum, or we see a trend occur or a trade occur, and the second we enter, it usually goes up and it knocks us out, because we don't want to miss out. We want to catch on to the big trade, but we're not being patient enough. We're not waiting for the pullback. As humans, no one likes to miss out. We like to join what everyone else is doing. We like to have a good status. We like to have a good social media. No one likes to be different. All right? And in Forex is no different. Everything we do is to make money, but you have to not think about making money. You have to think about sticking to your main goals, just following your trading plan. FOMO and ego are massive fears that we have as humans that affect our trading. Losing money, another big one. I reckon about 50% of the whole population, or even more, I have no idea. Let's just take that back. There's a lot of people that don't like losing money. They like to save money, but they don't do anything with it. They just save it and just build it up, and then they never really risk any of it, right? In Forex, you don't have to be a risk taker, but you do have to accept that losing money is part of the game. Most people describe it as like a business expense. So when you own a business, you have to pay expenses. In Forex, there's not really much expenses. Once you have your phone and laptop, you can trade. So losing money is considered to be, an idea of a business expense. It's part of the business. It's part of the cost of trading. But most humans, us as human natures, don't really like to lose money, or uncomfortable doing it, or don't understand it, because it doesn't really make sense to us. Another fear that we may have. And the other one is leaving money on the table. If there was money lying around on the floor, $1, $2 coins, or anywhere, naturally we pick it up, or naturally we take notice to it, because we never really leave money. Like, who just walks away from leaving money? And this one massively is when there's money on the line in trading, but we're not sure when to take profit. Okay. And we should be sure, because our trading plan should have profit targets, so we shouldn't even need to think about it. But we don't like the fact that we have to decide when to take profit. But leaving money on the table is massive, as you can imagine. As humans, we don't like, if there's money there, we make most of it. We don't just walk away and leave it for free. 95% of the trading errors you will make, causing you to lose money, will stem from these attitudes we have. And these are all innate attitudes. As humans, we all have them. We all have an ego. We all, don't want to miss out. We hate losing money, and we don't like leaving money on the table. So these natural fears that we have, that we are born with, that we grow up with, that we, make them a custom in our lifestyle, have a play into Forex and actually affect the way we trade. And it makes it difficult to be emotionless, because we're humans. So how do you trade but not trade at the same time? Because by trading, we're following a set of rules. But how do we not trade by actually thinking about it? It's very difficult. It's very, it's very in-depth, and it might not make sense to you now if you guys are a beginner or even advanced. But when you sort of experience, and when you sort of understand that, emotions really do affect your trading, this will make sense to you. These fears will inhibit your state of mind and prevent you from trading without emotion. Okay. So what are some psychological challenges we have? So in literal trading, first one is overconfidence bias. So I cannot lose. So, if we have a win streak of 3 or 4, we feel like we're overconfident. We feel like we can't lose. Everything's working in our favor, right? If someone has ever told you, my strategy can't lose, You know, I'm going to be profitable and I can't lose. You know, let's put $1,000 more and I can't lose. It's time to win. If things going to drop, it's going to drop. We have such a bias that we just don't believe that the market, you know, it doesn't matter what we think, the market can still, you know, go the opposite way, even though every entry could line up. We have this overconfidence bias. Next one is anchoring bias. You know, the past doesn't foretell the future. So this is important because, you know, if whenever we take a trade, we understand that we can win or we can lose. Now you take 3 trades in a row, and just because they all lose doesn't mean the next one could win. Okay. And this is, you know, clear enough to say that every single trade is independent of each other. Then there's no such thing as, you know, a accumulation of trades that are going to make something happen, right? It's like at the casino when you bet on black or red. If black was hit 3 times, it does not mean that it's more likely for red to be hit. There's no increase in chance. It's still from the beginning, black or red is 50-50. But we have this bias that, you know, in trading, that no matter that every single trade is going to eventually lead to a win, but it's not. Every single trade is independent from each other. Next one is recency bias, being fixated on the smaller picture. So this is more about, you know, catching like a 15-minute time frame move or 30-minute time frame move without really seeing the bigger picture. It's a small-minded trader who doesn't really do top-bottom analysis. So they might just see one thing, but really that one thing is overplaying the bigger picture. It's like a pullback or something. And people can be stuck in those, you know, in that bias because they're sort of catching the corrections on the impulse because we don't really take a step back and have a look at it properly. Okay. Confirmation bias is a massive, massive one. So this is basically putting attention to your supporting trade. So if I'm trying to buy a currency, I put my attention to all my buy signals. You know, I look for that touch of the, you know, trend line, touch of the support. I look for that buy opportunity, but I'm not looking for the sell to it because every single trade has a buy and a sell setup, right? But the buys might be more stronger than the sell setup. But there's still there's still that chance of it doing both ways. But whenever we have a look at a trade, we never really look for the other side. We don't try to argue the other way. We just say, okay, this is looking like a buy, but we don't say, stop, all right, you know, if it was a sell, what would it look like? That's a really good one too. Loss aversion, too scared to lose money. You know, as humans, we are like that, like we spoke about before. But that can really play on your confidence or really play on your, you know, your ability to take trades. We don't really want to do that. But that's something you got to overcome. Like you got to be not used to it, but you need to understand it's part of the process. To lose money and make money at the same time is part of the process. And risk mitigation. So break even too early. So that's probably same thing as loss is being too scared to, or, you know, not really knowing when the price to break even, because most traders miss good moves because they will break even too early. Because when you see price and profit and you see it moving around like crazy, like the best thing to do and the most safest thing to do with humans is to just set it to break even. But we tend to miss out on the big moves. So that needs to be part of your trading plan too, to not let emotion affect that one, okay? How to handle psychology. Like I said, I'm not going to fix all your problems in one video, but I'm going to try to give you guys an idea of what can be done, all right? So for starters, how do experienced traders handle emotion? So what do professional traders look like, all right? So they don't trade out of greed. They're not trying to make money. They're like most people jump into the Forex or jump into the markets, right? To buy a car, to buy this flashy thing, to be financially independent. But you got to understand that if you just follow a set of rules and apply risk management, the process will do it itself. So experienced traders don't really worry about, you know, how much, like if they have like 2,000 expenses a week, they're like, oh my God, I got to make $1,000. I have to make this. They don't worry about like that. They just do whatever needs. They just follow their process, and then whatever happens, happens. They're not trading out of greed. They are aware of the uncertainty in Forex. So you know, as an experienced trader, that you can lose money. Like it's so possible to do it. And the uncertainty of that, you know, anything can happen in Forex. Even though you're 100% right, it can still go the opposite way. And that happens to all of us, you know. People say it's a stop loss hunting. People say, you know, it's a market just rigged or something, but it's not. It's just the way Forex works, okay? And they never expect quick profit. So they, like most experienced traders, don't really have eyes on profit. They just follow a plan. If it gives them profit, great. If it doesn't, no worries. We're going to keep following it. But they never expect a quick profit. And the most people that you see on the internet make good money, ideally, or they make good money. But that might be like one good trade for the week, or, you know, one good trade for the month. We don't really know what happens behind the scenes, but they never really expect quick profit, all right? So some tips. Have a very good trading plan. Very detailed, very concise. Take the emotion out of it and write down step by step exactly what needs to be done. That's really going to help you mentally by not even thinking about it, to make it robotic, automatic, okay? Place and trade and walk away. This is, you know, $1 million, like I can almost guarantee every single trader, when they place a trade, gets the urge to look at it, gets the urge every 5-10 minutes to look at it. If you're placing a trade on a 50-minute time frame, you know, in order for you to actually know what's going on, if you wanted to, it would be 15 minutes until the candle closes for you to see what happens next. Really no need to look at it at all. But the best way to do this, to set a trade, place a trade and walk away, is to use your alerts in TradingView. Put your alert to take profit 1. Put your alert to stop loss. Use your alerts so that you don't actually need to look at your phone. I do it. A lot of experienced traders do it. It's honestly a game changer using alerts. I tell you right now. Try it out. Use a well-proven trading strategy. So this is not the same as making one. This is the same as, using one that has been proven to be successful. Your one, okay? Because this allows you to trust the process. You know, if you know that your strategy is a 40% win rate, but it's profitable because you're using a 1 to 5 reward ratio, then there's no arguing about it. If you have made a good trading plan, but given tests that you don't have the numbers, you don't have the result behind it, then you're gonna, you might doubt yourself. You might change it a bit. You might tweak it. If you know and you believe and you understand and you trust the process that your trading plan is going to work, or has been working in the past, that's really going to be a game changer. Through backtesting it and through understanding it, those numbers are really going to help you mentally and psychologically to follow it. Okay, and 3 or more, take a break. So this is one of my tips. 3 or more wins, take a break. 3 or more losses, take a break. 3 or more trades, take a break. So just because you're winning a lot, you got a massive win streak, doesn't mean you keep going. It means you just take a breather, let that ego get out of you, let that confidence get out of you, and then reset and don't change your risk, don't change nothing. Take a break, because the second you get 3 or more things, mentally, you start to be switched on and you start to be emotionally attached. 3 or more, take a step back. Managing your emotions is the only way to succeed in Forex. The only way to succeed in Forex consistently long-term is managing your emotions. Now, I still struggle with mine. I don't think it does go away 100%, but it takes experience. That's from my experience. The game changer for me has just been experience. Just keep practicing, keep trusting the process. There hasn't really been a turning point for me. Or there has been a few, but it's all come down to just, practicing what you're doing every single day, day in, day out. Have a really good routine around it. So have a good daily routine off the chart and a daily routine on the charts. And that's going to help you to manage your emotions. Put yourself first. Actually focus on yourself. Have some me time, whether it's going to the gym, whether it's, waking up, doing a good morning routine, a good night routine. That's part of trading. Focusing on yourself and actually ensuring that you are the strongest mentally and strongest physically is going to affect your trading in a positive way. They're positively correlated. So managing your emotions is the only way to succeed in Forex. It starts with yourself. It starts with working on yourself and then working on the trading plan and then doing everything you can in your power to stick to that rules. Hope this was useful, guys. Psychology it's one of the hardest things to master, but once you master it, you really start seeing the benefits of Forex. So these are some tips I have. This is what experienced traders do, and I really hope that you can start to consider it when you trade.